My name is Steve Peters, and I'm the founder of baseconsulting.co, an end-to-end supply chain management solutions provider based in the US.
I'm Richard. I'm the founder of Kronos Now, and we do e-commerce accounting.
So today I kind of just want to talk with you, Rich, about these 6 Amazon accounting issues that often come up for Amazon sellers. And I know you have a lot of experience talking with Amazon sellers over the years. And, there's definitely more than 6 here. But hopefully we can go over the next few of these and hear your thoughts on that. So just kind of jumping into it, the first one here is, losing track of sales tax. Sales tax is a really big issue, I know. And we've talked about this a lot, I know. Kind of just interested in hearing your take on what the best practice is, briefly, for a non-US citizen seller on Amazon US.
Great.
What
Yeah.
advice?
So it's the first thing to understand is the concept of a marketplace facilitator law. So this is passed at a state level. So not all states have had it over the years, but right now, all the states that charge sales tax have marketplace facilitator laws, which mean marketplaces like Amazon, the liability for sales tax sits with them for sales that happen on their platform. So Amazon will charge a customer sales tax upon checkout, collect the money, and pay it across to the specific state. Now, that's different to like a Shopify or a WooCommerce, where Shopify, if you turn on the sales tax for that state, will charge the sales tax, collect it, and pay it across to you as the seller to pay. So that is really important. So if you're only selling on Amazon, then your liability is practically zero, right? It gets a bit trickier when you're doing multi-channel, and if you're doing Amazon and Shopify, then guys get confused because they think, well, the nexus is looked at individually, but that's not the case. So if you're an Amazon-only seller, this should not be a big concern of yours. If you're multi-channel, then you've got to apply your mind a bit more.
Sounds good. And would you say there's kind of a threshold for sales volume that you kind of need to look at these kind of sales tax issues? Like, is there like a threshold of, like, say, $100,000 or something to where you really kind of need to pay attention to this?
So again, let's separate between if you're an Amazon or marketplace seller only, then go ahead, do 10 million a year. Amazon's collecting and paying for you. Right. If, however, your suppliers are in the US, there's an interesting concept, right? Because your suppliers then are going to be charging you sales tax if you're not sales tax registered. So there might be a good reason to go and pick 1 or 2 states where you have the most presence and register, so that then you can supply your exemption certificate and not be charged sales tax. If you are multi-channel and you're selling in Shopify, then it's not about economic volume first. It's actually about physical presence. Then it gets a bit more complicated, right? Because you probably have inventory in multiple FBA warehouses. Now, don't be confused that Amazon and Shopify are separate for Nexus review. It's one business, right? So there you do want to just take a cost-benefit approach to your liability assessment. And then I would look at any states where you're doing more than 200 orders a year or $100,000, you probably want to go and check if you have Nexus. The cool thing is, if you're on Shopify, Shopify gives you these big warnings about economic Nexus. If you have Nexus in a state. But remember, Shopify is only looking at the Shopify data. Most states, you should look at your sales in total between Amazon and Shopify from Nexus, even though Amazon's collecting. So it's a handful.
Makes sense.
Right?
Yeah. So that kind of brings me to the second question is, most Amazon sellers rely solely on the Amazon data that they see, but really that's kind of just one piece of the puzzle when it comes to your financial health. They have a profit and loss statement, but it only is like maybe just a glimpse at what's really going on. So what would you say is like the number one thing when you're looking at Amazon seller store that you often will find that's kind of not correct? Because obviously when you have apps that are kind of doing this thing for you, obviously the output is not always what it should be. There's a lot of confusing things. Like, what's the number one thing that you see that most Amazon sellers are missing from these reports?
So the biggest thing is usually the your gross profit figure is wrong because your cost of goods sold is wrong, right? I think, and Amazon doesn't have that information. Most sellers aren't going to go and put you can upload your cost of product into Amazon, but most people are quite protective because they don't trust, if Amazon sees it's profitable, Amazon's going to come steal your business, right? So that's the number one problem across the board. And getting that cost of goods sold is quite difficult. How do you take inbound shipping? And I'm sure we'll talk about that just now. Mm-hmm. The second thing is, most Amazon sellers will have a program like Seller Board or something like that, where they're analyzing the sales. So they ignore their accounting. But you've only got some of your business data in there, right? You don't have the costs of the entire business. So a lot of people will think they're being profitable, but they're not, because they're not looking at the rest of their data. And then the other extreme is they just give the bank statements to their accountants. So the accountants are doing cash accounting, where they just take the receipt from Amazon, right, and put it in a sales. Totally wrong, right? Because you're missing all the different line items. Amazon's got so much detail. You want to split out Amazon sales, the promotions or refunds, shipping. You want to be able to assess all of that, right, in context. So, and in the correct period, right? So having a proper program that pulls all that detail out into the accounting system is really useful. And then what you should be doing is taking your seller board, which goes detailed for you, right? Per day, per SKU, whatever, and comparing those totals to the total in your accounting system per month. If that number's not reconciling, one of your systems has got the wrong data. Yeah.
Good stuff. So I see that misclassifying inventory as a business expense is a common thing that accountants will do when they're working with an Amazon seller. Why is that?
Because it's easy to just put your purchases directly to an expense, right? So that is, if I've got to be honest, why do you need an e-commerce accountant? The biggest reason is actually to get your cost of goods sold expense correct. So what most people do is, especially smaller sellers when they get started, they are taking their purchases of inventory, the payments that they make to suppliers, directly to cost of goods as an expense. So just picture the world, you spend $1 million on inventory that's going to last you for 6 months, right? So let's say you now do a couple of $100,000 every month between now and say June next year. Well, the problem is, if you've expensed all your purchases on day one, your income statement is totally out of whack, right? You're going to show a huge loss in month one and then huge profits because you've got no expense.
Right.
So inventory needs to go to the balance sheet. It's like a little holding account, an inventory account, and it's taken out and expensed as and when the sales happen. That's
so
really
is that what accrual accounting is, basically?
That's exactly.
So that's the right answer to this, right?
That's
accrual.
Exactly it. And it's really difficult to do because you don't have an inventory system, possibly, right? How do you get that data out? It's really difficult to get right. And what do you do with things like your freight and customs duty? Does that go to inventory as well? This is not easy to get right.
Right. Yes. So what about the most Amazon sellers, when they're starting out, accounting is certainly not the first thing they think of when they are, starting their business. They're thinking about how fast they can make money, turn a profit, focusing maybe on getting a perfect product, private label, and so on. What do you think the best what's the threshold for when you really need to start, looking for an e-com accountant? Is it a figure, or is it should you be starting off immediately? Because obviously you're looking to kind of limit your expenses when you're starting out, and so on. But what's your advice on that?
So I get contacted a lot, funny enough, mainly by British people are much more risk averse than US people, right? So as a British person is starting their plans for their Shopify or Amazon store, they start contacting me. I'm like, guys, don't even worry. go get $20,000 or $30,000 a month in sales, right? At that point, when you're small, let's call it below $20,000 a month, you running your business from your bank statements anyway, right? So up until then, you're probably fine with getting a simple set of accounts done once a year for a tax return and staying on top of things in the most basic way. It would be lovely to have an accounting system then, but the problem is it's going to cost you $500 a month plus.
Right.
So I have a couple of thresholds. So below 20 grand, I usually tell people, make sure you're keeping a clean bank statement, only for business. You keep your inventory purchases, get your CPA once a year, and make sure you do your cash budgets. Between 20 and say, call it 100 grand, yeah, you should get an accountant, and you're going to be in for $500 to $1,000 a month. And they should be doing simple accrual accounts, right? Maybe just with the buy cost, using a simple program like A2X or Keep My Books, which is estimate your cost of goods sold. It does some type of accrual. As soon as you get above
$1 million, said Keep My Books. Is that right? Keepmybooks.com.
Yeah. Keep My Books. A2X is the most used platform. Right. But QuickBooks has got a direct link now to some platforms, not to Shopify. But there's a whole bunch of programs now that are perfectly adequate. A2X is the biggest player in the market, and their system works the smoothest, right? And what that's doing is it's pulling the Amazon data with all the fees correctly classified. And the cool thing is it's doing some type of cost of goods sold estimate. Right. There's some new players in the market, people like Finaloop, right? That are kind of like an app, kind of like a bookkeeping. They do an okay job. And if you're selling just on Amazon, they probably will be just perfect, right? Right. When you get about $1 million, the details around getting the cost of goods sold really well done. And by then, you're probably also multi-channel, so your accounting is more complicated. You probably want to engage a e-commerce accountant like us. There's quite a few guys, Bean Ninjas, Ledger Gurus. There's a few people in the marketplace that do really well. But you want to make sure that you're doing this monthly at that stage, because accounting is not just about the tax return. So people procrastinate. Right. I get people contacting me in March. Oh, I've got my tax return next month. Can you do my last year books? No, I can't. Right? It takes me 6 to 8 weeks to catch it up. Oh, you haven't kept any records? Well, just go to someone on Fiverr and do cash accounting, right? So I think
that's what is mostly what is mostly being presented on Fiverr or Upwork is cash accounting, which is a huge difference from accrual accounting for the way you explained it. So I think that's very important for people to understand, because when they're analyzing a quote, say from an e-com accountant, and then they go on Fiverr or Upwork, it's a huge difference. And the difference is it's cash accounting versus accrual accounting, right?
Exactly. That's exactly it, right? And I think what's also just important is to understand that your accounting does have a tax impact sooner or later. So let me tell you my most common horror story. Someone comes to me and they don't want to pay yet. And they come back in a year's time because suddenly they got a huge tax bill. So what happens is they think with accrual accounting, if you're doing cash accounting, your purchases go directly to the expense account. But then the following year, that expense isn't there, right? So if you're ramping up in sales, you might not have $1 million in the bank, right? But you actually made $1 million in profit. And that money could be sitting in inventory now. So I've often got customers who come to me, I do a cleanup, they get to the end of the year and I say, you made $1 million in profit, but $800,000 sitting in inventory, and now they got a 400 grand tax bill. Where are they going to get the 400 grand from? They had no idea of what that was coming.
Right. What about identifying profit centers? It seems like that's another common, misstep for Amazon sellers, just not identifying the profit centers.
I think the profit center, Steve, is if I talk about my different layers, right? So accounting systems are not inventory systems. They're not pulling in, an A2X is not pulling in all the individual sales. To do that is quite complicated, right? So what I do with our clients, as soon as they get above 3 million a year, sometimes $1 million a year, then we want to go into a more detailed version of accounting where we're pulling in individual orders and transaction details into the accounting system, right? When you do that, you can start splitting out profit centers. So we can have different ways of doing this. The first thing is, do you have profit center per sales channel, right? You've got different product groupings, right? Now, doing that data versus just dumping it all in one big sales account is really important. In a perfect world, I'd love to go from even below profit center to profit per SKU, right? But then you need a big ERP or inventory system to do that accurately. So all of this is cost versus benefit. The 20 grand a month seller who's selling just on Amazon and has 5 products, profit center is not a worry. The $3 million seller who's got 3 different type of product groupings or 20 SKUs in each, you want to be able to group that because you want to analyze in order to make better decisions. Which products and profit centers are break even and profitable. Not easy to do, but if you're working the data correctly, you can use something like A2X, for instance, and Xero or QuickBooks to set up different tracking categories per profit center. All about the upfront design of the accounting system there.
Makes sense. So it's important to hire an e-com accountant that's doing accrual account. That's the main point here, right?
Absolutely. I'd say that the 3 big things are, you've got to get the Amazon to pull out your seller fees from the revenue and get that in the correct period. We spoke about that first. The second thing is getting cost of goods sold with your inventory accounting right. And then the level of breakdown per profit center, or when you're larger, even per product. Those are the 3 big things you want your accounting system to level up to, not just cash accounting for a tax return.
Sounds great. Well, thanks for talking about e-com accounting, good practices. I appreciate your time.
Anytime, Steve. Thanks.